This is Brian Duncan, local realtor here in Virginia Beach. I hope you've had a nice holiday season. We're about to close out the month of December and the year of 2023. I just wanted to bring you this real estate market update to show you what we saw this year in 2023 and then what we expect going forward into 2024. So anytime I do an assessment of the market, I look at four statistics, and they start with the sales prices, the number of sales, and then time on market, and then the inventory. So let's dig right in and take a look at some of these. The first thing is going to be sales prices. As you can see here, over the last 5 years, the prices have continued to rise, even despite higher interest rates over the past year here. So in 2023, the median sales price was $361,000. This includes all homes, including detached, attached townhouses and condos. And that number is up from $338,000 a year ago in 2022, which represents a 6.8% increase year over year. The next thing we'll look at is number of sales. The number of sales this year was about 5,300, which is the lowest we've seen in the past 6 years. This is most likely due to higher interest rates. You can see that in 2020 and 2021, we reached 9,000 and 10,000 sales each year. So we're well under that amount. And you'll see going forward that the prices have continued to rise even despite lower number of sales. Another thing I wanted to look at was foreclosures. I looked at the number of bank-owned properties that were offered for sale. It also includes government HUD homes that were offered for sale in Virginia Beach. And there were only 52 in the entire year in Virginia Beach. So that represents just less than 1% of sales. So foreclosures is not really having an impact on our market at all. Now let's look at time on market, or the number of days it takes to sell a home. So this chart goes back about 10 years, and you can see it kind of goes up and down depending on the season. Typically in the wintertime it takes a little bit longer to sell homes, and in summertime they sell a little bit faster. But you can see that this line has trended down over the past 10 years, and it's basically in the last few years it's been between 1 and 2 weeks to sell. At the end of this year, with rates increasing this year, you can see that it has increased from around 7 or 8 days to about 15. So overall, it still takes about 1 to 2 weeks to sell homes, and historically that is still a very low number. The next thing I look at is the inventory, or the number of months it takes to sell homes. This number will look back and see how many houses we're selling over each month over the past 6 months, and then look at how many houses are offered for sale today. And this can give us the direction of pricing. All right, so typically when this number is less than 6 months, it's considered a seller's market, and houses are appreciating in prices. When it's very low, right around 1 or 2 months, houses are appreciating in value quickly. We're typically seeing multiple offers in those scenarios. But if this inventory number shifts above 6 months, then that's getting into the territory of a buyer's market, where you typically see price declines. You'll see offers under asking price. You see sellers paying concessions. But we just haven't seen that, and we haven't seen it in a long time. So when we look at this chart, it'll show that over the last few years, it's still been below 2 months, and towards the end of this year, it increased from just under 1 month supply of homes to approaching 2 months. So as long as the inventory is staying below 6 months, we're still going to see price increases. And at 2 months, that means we could have 3 times the number of listings coming on the market every day before we reach a balanced market. So there's an extreme shortage of homes. I think part of that is after the Great Recession in 2008, lending really tightened up, and builders kind of got out of the game, and we just haven't kept up with population growth. So it's important to note that the U.S. Census Bureau actually came out with a report last month showing that the population is expected to continue to grow through the year 2080. So we got 57 years of population growth. We're still behind on building, and in Virginia Beach we're just running out of land. So I think when you look at all these factors, prices will continue to go up, especially when we're just looking at next year in 2024. So let's look at interest rates. Over the last couple years, we've seen increases. We had 2.5% to 3.5%, and everybody loved getting the low rates, but of course they've increased this year and reached as high as 7.75%, maybe as high as 8%. And you can see that as decline towards the end of this year has come down probably a full percentage point, currently about 6.67%. VA and FHA rates are a little bit less than that. I've seen recently around 6 to 6.25, and then in some lenders, in some cases, a little bit below 6%. So the rates have come down from the peak, and all the experts that I follow or pay attention to online all expect mortgage rates to continue to drop going into next year, going into the spring and the summer. And in fact, when we look at the Fed, who tries to control inflation through their monetary policy and their rates that they charge in overnight lending, that has worked. All right, we've seen signs that inflation is under control. It's closer to their target of 2%, and so that's going to kind of give us some relief in the mortgage market as well. So that's one reason for the recent decline in rates. And again, most of the experts that I follow in the industry expect that to continue to happen. And I think, by spring and summer, rates are going to be probably in the 5.5 range, maybe 5.5 to 6% range, depending on the type of loan. So that's going to really fuel the market. So when we look at affordability, we say, all right, can the average family afford the average price house? We can look at that and calculate it. All right, so let's say the average price house is $361,000 this year, but the median family income is $87,000. All right, can they afford it? Well, not really. Just looking at here, the payments at $361,000, assuming a 10% down payment, would be about $2,600 a month currently. But based on the income of $87,000, they can only afford about $2,400 max, typically. All right, and so one other factor that we haven't looked at in there is the fact that about 20% and slightly over 20% of the buyers in the market are paying cash. So the interest rate has no impact on these buyers. So when I look at that and see that housing prices are sustainable and can be afforded by the average family, assuming there's a 5.75% interest rate. Okay, that's just looking at where prices are, looking at the income, assuming a third of their monthly income can go towards the housing payment. And of course, that's the max. I mean, people like to spend less than that, but that would be the max. So when I look at that, all right, so prices are sustainable at about 5.75%, and I think it's very likely that we could get there or close to there in the next year. But we're going to continue to see a lot of cash buyers in the market that the interest rate has no impact on. 1 out of every 5 homes has been cash this year, and I think we'll continue to see more of that next year. So that leaves the question, if you're a buyer, should you wait for interest rates to come down? Well, when they do come down, there's going to be a lot more buyers in the marketplace. All right, so that's where you really need to figure out how much you can afford now. What's your monthly budget? Can you get the house that you want based on that budget, based on the current rates? And I think right now, my suggestion for most people is to buy as much house as you can. If rates do drop, then you can refinance. And it may take a year, it may take a year and a half, but I think they will drop to that point where it would make sense for most people to refinance. I think the risk of waiting is that, again, you're waiting for a time where there's more buyers in the marketplace that you're competing with. And as rates drop, they're going to be competing, they're going to be bidding over, and they may get outbid. But now, in January, February timeframe, early in 2024, is an opportunity where you may not be competing with other buyers, and you may also have a chance to get some closing costs paid by the seller. Also, if you're a current homeowner and you want to move up to another house, now's an opportunity where you may have a chance to sell with a contingency to buy that next house. And as the market heats up, as there's more buyers out there that don't have a house to sell, you won't have that opportunity. And so there's a couple other strategies you can put in place to try to do that and try to move to another house. But the easiest way to do that would be with a contingency, and that way you only have to move once. I think there's a very short period for this opportunity. So if you're considering moving this year anytime, let's sit down, evaluate it, look at the numbers, and then you can make a decision, whatever's best for yourself. So again, hey, thanks for listening. If you have any questions about your neighborhood, if you're in a different city in Hampton Roads, I'm happy to go over some of these numbers for you and help you decide what makes sense for you. So once again, thanks for listening. I'm Brian Duncan, local realtor here in Virginia Beach. Have a great day and have a great new year.